And good evening, everybody. This is Michael Filighera. I'm with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Sunday, September 12th, 2021. Picking up where we left off, I was looking for additional downside on Friday, and I got it. In fact, it came in a little bit heavier than what I was anticipating or expecting. And so let's dive right into the charts here. First of all, we're definitely out to the December contract now, which does change our numbers a little bit in terms of that high. And as I go out to the hourly chart, and it goes back and shows me the other high at 59. So I have to redraw my numbers yet again. So okay, I'm just going to not do that. I'm going to leave that because this was reflective of where they came in on my, what is it on my 40 chart? Still shows that upper number. Interesting, because when I open Thinkorswim on a different computer, it shows the December contract highs, which were here. But right now, I will rerun these numbers so we can be more clean on what to expect based on what this chart is telling us. So to begin, the market did start to come down and drop a little bit quicker and steeper than what I was basically looking for. And that kind of brought up a situation where I thought, okay, I'm going to continue to view this as a fourth wave correction, a minute fourth wave correction. But we've now slid past the 0.382 and the 50% mark. And what we're doing right now is coming back up to which now is resistance at 44.59. So we've opened up a little bit higher. We're continuing to build on that. That's not necessarily a bad thing, but here's what I think could be going on. If this is the completion point for wave A of minute 4, this is wave B of minute 4. Then we have a C wave, wave 1, wave 2, wave 1 of 3, 2 of 3, 3 of 3, 4 of 3, and we get a 5 of 3 down to maybe it just needs to go below that low, which is 47.25. And then we get a fifth wave, so 3 would be complete. And then we have another rally, and then we have another drop for a fifth wave of C. Now, this is where it gets to be very important. If we start to sell off in the same fashion we did on Friday, both Friday morning and then Friday afternoon, it is going to likely push us very, very close to that no break zone, which basis this hourly chart sits at 44.14. If I'm just putting up a December chart, it's going to come in at 44.06. Both numbers are going to remain important because right now, this is the chart that I'm looking at, and that number will be 44.14.75. That's the market cannot break below, because if it does, and then breaks again below 44.06, then it basically is negating the pattern that this completed wave 3 and that this is a fourth wave. The rule that cannot be broken under Elliott is that wave 4 cannot intersect or move into the price territory of wave 1. This is wave 1 of this sequence. Wave 4 cannot break below 44.14.75 on this chart without negating the entire pattern. Now, should that occur, what's it telling you? It's telling me that likely this 3 is going to get moved back over to here, and this is 5, a 5, a 5, a 5, all the way up. And we are indeed in the beginning stages of a super cycle wave 4 correction. Now, That is going to remain with an equal probability right now until the market can tell us that it intends to hold and to start to rally again. If that occurs, then it is a minute 4 complete. We'd be looking for a rally that will not be rejected by the market. So in other words, each time this market has rallied, it's rejected it. Rally, rejected. That rally, rejected, rally, rejected, rally, rejected, rally, rejected. So it keeps rejecting the buyers. Buyers push it up, the sellers reject it and push it down. That is what makes the count have equal probability of being all complete up here, and we're in the beginning stages. Something else. If this indeed is 1, 2, 3, 4, 5, that fifth wave being funky and not the best formed, that's going to have to be acceptable, because then this would be wave 1, wave 2, we're completing wave 3 in its entirety, not just internally, in an entire third wave, which would likely come down and break this. And then a 4 and then a 5 to produce on an hourly chart 5 waves down. That's going to give very strong confirmation that this was it. That's the high. We're likely not going to get back to it for a couple of years to come. Now, what can we look for tomorrow? It depends often on how investors, traders come out of the expiration from Friday. That expiration, as I said on Thursday's update, if they really start to move things lower, it's going to blast through strikes in the component stocks within the S&P. Major players on them at the moment: Apple, Amazon, Facebook, Google, Microsoft, Square, etc., etc. We have the different stocks. When they start sliding through, particularly it's tech, Apple. Apple opened at 155. That 155 strike had a pretty heavy duty open interest, because the perception was that it was going to go to 157 to 160. It went up 155, 40 or 50, I believe, and then it started to sell off. When it sold off and it breaks 155, that's a strike. 154, that's a strike. 53, 52, down to 50, 49, 48. It rallied back up, but did not close above 49. So it essentially blew through 6 strike prices, causing a lot of adjustments to be made as we got to that expiration bell. That same thing happened in Amazon. The same thing happened in Facebook. The same thing happened in Google. The same thing happened in Microsoft. So as all of these stocks, they are going to really force adjustments. You have to. Now, we may see additional adjustments depending on how traders came out of that expiration. Are they too long? Are they too short? We won't know until we get in tomorrow morning and we see how things play out. Right now, I'm thinking that what we absolutely are looking for, if this is a C wave, 1, 2, 1, 2, 3, 4, 5, up 3, 4, 5 to complete C. Now, if it breaks that zone that I've been talking about, then it's going to switch to 1, 2, 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3, then a 4, and an additional 5. So these are the 2 scenarios that are going to have to play out in the next day or two to clarify and solidify what our near-term direction is going to be for the S&P. Now, right now, we're a little bit higher. We're not breaking above the the hourly 4. Then we have the hourly 8 above that. Then we have resistance just at the 382 level. There was support coming off, resistance going back up at 81, we'll call it 44.81. And then right on top of that, we got the 20. It would surprise me in its current form that it would get above that without first dropping down and completing at least 5 waves down off of this high, 45.09. I've been looking for at least 1, 2, 3, 4, 5 to complete that. And then you've completed just wave 3 of C. And we have a 4 and a 5 to complete that C wave. That would be under this preferred count. So to me, we still have some good downside left to put in before even the minute 4 would be considered complete. So it's going to be feeling more like it's jerking. It's jerking up and jerking down. And that would be according to even the wave count. 1, 2, 3, 4, 5 to complete wave 3 of C. And then a 4, which is going to be an ABC, likely back into the territory of where this little 4 comes out. And then we're going to get a wave 5, which would be expected to drop it below 47.25, maybe down to 38.50, maybe as low as 23. Those are the next support levels on the way down. And then we have the 44.14 down to 06, which is the seriously don't break zone. Serious don't break zone. That's what it says. So a little bit of a rally, a continued drop, another rally with a continued drop. That's what I think we could get that all done tomorrow. And then it's market time to make an additional decision. Was that enough? Is it essentially a minute 4? And then we're going to start to rally again. If it's a rally in a minute 5, it should not hesitate, nor should it get smashed lower. Again, remember, rally, rejection, rally, rejection, rally, rejection. And it's going to happen not once, but twice more. This is a little rally, rejection, another rally, and a rejection. So the buyers are going to be confronted with several points of like, no, sellers are going to overwhelm, sellers are going to overwhelm. But eventually, if the buyers are still intent that they're buying this up for whatever their reason is, then it's going to do it without that rejection. It's just going to go and go and go, and it'll start to form 5 waves up again on the hourly chart to give us an inclination that, yep, that was over. Now we're building. And we'll do a larger 5-wave structure up. Minute 5 will consist of 1, 2, 3, 4, 5. So if the first wave gets complete, the first 5 waves up will just be wave 1. Then I'll be looking for a little pullback and another one. Then we'll be able to judge it because the third wave should be the longest and the strongest, most often the longest. And that'll give us support that indeed a minute 5th wave to new highs is underway. And again, well, then I will put the extensions back into place wherever this 4th confirms its bottom. Then I will put them in, and then we'll have our resistance and our points of where we expect the market to get to. This is where I'm going to leave it for right now. A lot rests on tomorrow, and the next update will be Monday the 13th.